Hello, welcome back, gang. If you guys are new, my name is Akil Stokes. I am a professional currency trader. I am a trading coach over at tier1trading.com, and I am host of the Trading Coach podcast, which has been really quickly been growing into one of the most popular Forex trading podcasts out there. We just started this back in, I believe mid-March, and already we have almost 200,000 downloads. Maybe by the time this comes out, we will have 200,000. We are always ranked, consistently ranked within the top 10 of Forex trading podcast on Apple. And each and every day, we're getting more and more great comments. I got a comment a few minutes ago from a trader that said, "Hey, I've been listening to your podcast and really enjoying it. Your content is very relevant and I enjoy your delivery. Just wanted to say thanks. Keep up the good work. I rated your podcast 5 stars and now I follow you on Facebook. Let me know how else I can help." And that's great. We have people going out of their way to help grow the show because they know the message is deeper than whatever the particular topic is. The message is that we are slowly trying to change the reality, or I guess not the reality, but we're trying to change how people think about Forex trading. It goes for stock trading, crypto trading, whatever you want to call it. The reality needs to change. The paradigm needs to shift, right? We need to really get rid of this idea of trading being this get-rich-quick scheme, this easy money venture, and show people that, yes, you can make a career out of this. Yours truly is a great example of that. Yes, you can have whatever you want to achieve, whether it's freedom of money, whether it's freedom of time, whether it's wasting your money on fancy cars and jewelry. If that's your thing, do it. The fact is that is achievable, but it's not easy. It's going to take a massive amount of hard work. It's going to take a massive amount of time, and it's going to take a massive amount of effort. And I always thought that if you know what you're facing going into it, you have a much better job of achieving that goal because now you're not caught off guard when those obstacles do occur. You're prepared for them, and when you're prepared, it's a little bit easier to take them down. And today's podcast follows up on that very subject because over the weekend I was having a conversation with one of our traders on our platform. We have a chat center on our platform where traders can come in, they can talk to each other, bounce ideas off of each other, look for advice, whatever. And this weekend I was spending a lot of time on there because I was doing some back testing on my computer. So what better to do when back testing than throw on the Netflix, or in this case was the Amazon Prime, watching some Sneaky Pete, load up the chat and give traders a chance to ask me some questions. And we were talking to a trader who asked the question, said, "Akil, how come you only expect a 3% return per month? Shouldn't you be expecting more than that?" And I said, well, no, I expect that amount because I know that if I'm trading my system consistently, that's what my system produces, right? And we have to understand that each strategy, system, technique you trade, right, when you do your testing and when you do your live trading, it's going to have an expectancy, right? It's going to have a mark that you expect to be hit. Historically, if you trade a Bollinger Band breakout, for example, historically, let's say you hit at a 60% win rate and that system returns you 40% a year. Right? If you know that information and if you've consistently executed that strategy in the live markets, and because when you're trading live, there's all types of other elements. I like to take about 5 to 10% off of my backtesting results when I trade live, just due to human error, right? We're going to mess up. We're going to make mistakes. We're not going to catch every opportunity, right? Our eyes aren't perfect. So you want to take that into account. But in general, right, if you're trading a strategy and all of your work, all of your homework has told you that it's supposed to produce X and it's supposed to produce Y, why would you go into the market thinking that instead of a 60% or what I say, a 40% return, that you should be getting 80% out of it, right? That's just not realistic. Now, there are ways to boost your return as far as money management goes, position sizing goes, but that comes with an associated risk. So the trader was talking to me, said, well, how come you only expect 3% a month, 30 something to 40% a year on average for return on investment? I said, well, that's what my system produces. He says, but what if I want more than that? Well, I said, well, if you want more, there's a few things you can do. One, you could become a better trader, right? You can just become a better trader. Maybe that means adding a different strategy with a higher return. Maybe that means adding, looking into your trading portfolio more and kind of maximizing your portfolio. Maybe that becomes just becoming better at the skill of trading, right? Better at reducing your risk and increasing your reward on a per trade basis, right? That's one way, and that should naturally happen as you become a better trader. But I was under the impression that this trader was looking for kind of the get rich quick scheme type of deal, because this is a trader that's he's been with us since the beginning. And, I know the traders I work with very well, and I know where their underlying beliefs lay. That's what that's what makes me a great coach. I know what you're thinking before you even think it. I'm in your brain, right? So the other two ways, right, were to do this. One was to you can increase your position size per trade, right? That would increase your potential reward when you win. That would increase your potential risk when you lose. You can do that. Or you can use a more aggressive position sizing strategy, right? We have a money management spreadsheet that we give out, which is used to kind of show you or give you an idea of what your position size should be, your risk of trading that position size, and all that fun stuff. You could be as conservative or aggressive as you want with that strategy, right? So if you want to be conservative and really manage your drawdowns and increase at a very, very, very slow rate, you can start with a very low position size and use a very conservative delta. On the other hand, if you want to be very, very aggressive, you can crank both of those up. And I shared with you an example of that in a podcast called the $30,000 return on investment, something like that, the $3,000 return on investment. One of the old beginning podcasts, right at the very, very start, back in March or April. But that comes with associated risk, and that's where you see typically a lot of these big rewards that traders brag about, right? They use an inflated position size, and when they win, right, it looks great because now you're winning at like a 50% clip per day. But when you lose, all it takes is a few losses to wipe your entire account out. And it was me and another experienced trader on the platform arguing with this trader, and not arguing. We were very sternly trying to convince him to change his mindset. And we're basically saying, dude, with that mindset, you are going to go broke. That is the go broke mindset. You have to change it. And the trader had fired back with another idea. He said, well, look, what if I do this? He said, what if I start off risking 20%? And then if I just reduce my risk percentage on each trade after I lose, I'll technically never go broke, right? If you cut something in half, you'll never get to zero because it's just going to get smaller and smaller and smaller. In theory, that is correct. In reality, that doesn't really work so great. Not only can you only reduce your position size so much, but the fact of the matter is, the more you lose, the harder it is to come back off of those losses. And I forgot the name of the chart. It's a formula. What is it? The loss frequency formula. Give me a second. Let me just kind of brainstorm this real quick. All right, so I'm having the biggest brain fart right now, but I believe it's called the percentage recovery formula, something like that. Give that a Google search, and I'm sure you'll be able to find an example of that. But basically, it's a formula, and if you can find a chart version of it, it's even better, which shows you once you lose a certain amount of money, going back to the way the trader was talking about trading, how much you need to create just to get back to break even. And it's pretty dead even once you're at the lower levels. If you lose 10%, it's going to take 11% to get back to break even. If you lose 20%, it's going to take 25% to get back to break even, right? Nothing really big there. But once you start losing a lot of money, like 40% of your account or 50%, 60% of your account, it's going to take you 67% to get back to 40, 100% to get back to break even if you lose 50, 150% to get back to break even if you lose 60% of your account. And essentially what that means, right? Don't worry about the numbers too much, but essentially what that means is that once you blow a significant amount of your account, right? Once you hit a big enough drawdown, you have to become a better trader just to get back to break even, right? Just to get back to break even. And if you think about it, it doesn't make much sense, because if you were that good of a trader to begin with, right? You wouldn't have taken a 60% drawdown. So how do you, if there's obviously something wrong if you're trading that caused you to take a 60% drawdown, how are you magically gonna get better as a trader, get a 150% increase just to get yourself to break even before hitting that next drawdown, right? It's just not realistic. So we tried to shut down that view really early this morning in our live Q&A session. But not just that, but this particular trader happens to be about 17 years old, and I wish I was on the right track with my trading at 17 years old. And this trader has a long ways to go. Obviously, you know, when you still kind of have the mindset hasn't shifted yet, and it's a young mindset, so I understand. But this trader's in the right place. They've signed up for what I consider to be the best trading education on the internet at Tier 1 Trading. They've surrounded themselves with like-minded individuals who are not only positive, but very supportive in the trader reaching his goals. So the trader he's doing everything right. It's just got to take that final step of looking in the mirror and coming to the realization that what I used to think was the reality about trading isn't. And there was another trader that shot me a message today too on Instagram, and this is a trader that is really has the same mindset. Let me see if I can find this question real quick. It says, "Hey Akil, great Q&A session this morning. I can relate, but just a little bit more about the 17-year-old trader's question. Mostly because my very first education in Forex with another education platform pretty much preached Forex that way. Remember, a 5% per day return." Remember the 5% per day return that I sent you the other day, and this trader has sent me a chart from their former education place that said, hey, if you can just make 5% a day, you'll become a millionaire this quick, blah, blah, blah. And basically when this trader asked me if that were true or not, I said it's a bunch of malarkey. It is complete BS. Unless you're very good, but I think 99.999% of traders would agree that making 5% return on average per day is not a realistic expectation. And the trader went on to ask, makes me wonder, you know, how can I earn enough money? And it puts it out there more and more that this is the mindset, guys. The mindset is that it's a get rich quick scheme, and you have to break it. You have to break it. You have to break it. And just put two and two together, right? If we hear the percentages about how many traders fail, right? 90% of traders fail. 90% of traders lose 90% of their money in 90 days. If trading were that easy and if it were that quick, would the failure rate be that high? Think about things that are easy to do. Things that are easy to do, you typically have a lot of people that are able to do it. Things that are hard to do, you typically don't. And you got to change this reality. It's the same thing like professional athletes, right? Oh, it's easy to make the NBA. Oh, it's easy to play in the Premier League. Is it? You think that until you're 30 years old and your time has passed and now you're watching it on TV. You have to change the mindset. And what I was telling this trader is, hey, forget this get rich quick stuff. You're 17 years old. I wish I was in your position at 17 years old. Let's talk about the power of compounding money. And I shared a chart with our traders this morning. I didn't have a lot of time to look for a good one, but it was basically showing the rate of growth over some different yearly time frames. And let's put it this way: if your annual rate of growth is 20%, and I think this chart started with a $10,000 account size. If it's 20%, right, in 10 years, right, just with averaging that 20% return, in 10 years, you're looking at basically $62,000. Right? It will take you 10 years to make $62,000. That's 20%. Now, if your trading performance is more than 20%, if you average 40% per year, obviously you can do the math and plug that in. But the point is, we looked at this trader, and I always tell traders that if you want to trade full-time off of your trading, Full-time, you probably need a minimum of $200,000. And that is going to be different depending on where you're at, right? Lifestyle has a lot to do with that. $200,000 in New York City in the US is a lot different than $200,000 in maybe Africa, someplace like that, right? So it all depends on what your living conditions are, and you can easily calculate what it costs per you to live. And in fact, if you don't know what it costs for you to live, you're probably not very good at your personal finance and budgeting. But if it's going to take you $200,000, right? Let's just keep with that number, to become a full-time trader, right? Have all of your income come from your trading results. And if you're going to produce $62,000 plus in 10 years, not to mention you're going to throw, a certain percentage of your normal income back into your trading account. It's not unrealistic to say that in 15 years, this trader could be a full-time trader. In 15 years, he's 17 right now. In 15 years, he's going to be 32 years old. And a lot of you get scared of that number. You look at 15 years. Well, 15 years is so long. I don't want to wait 15 years. And if you listen to a podcast I put out last week, there are other ways to kind of accelerate that process. But even without doing that, with doing nothing else, if you're not willing to invest 15 years, I question your willingness. 15 years at the age of 17, let's put it that way. I question your willingness to succeed. Because bigger picture, right? You've achieved, maybe not your goal, but you've achieved one of your major goals of becoming a full-time trader whose sole income comes off of his or her trading by the age of 32. Your life expectancy, right? What do we die at now on average? Let's say 85. Let's say 82. Maybe you die a little bit young, had too much fun with that money. You die at 82. You got 50 years of living the dream. You got 15 years of working towards the dream. You got 50 years of living the dream. That's over 3 times the investment. 3 times the amount of time to reap the benefits of your hard work. I will take that every day. And again, if you accelerate that process, if you take your skill of trading and grow it into a business, maybe you cut down that 15 years in half, maybe to 7 years. And now by 25, this trader's trading full time with a trading business, with multiple streams of income, not just from his trading, but also from his trading business. You guys got to have a more realistic expectation of what can be achieved. The main goal is develop the skill. The main goal isn't to produce profit. That's where you guys are missing out. You're wasting time worried about how much profit you can produce and how quick can you make X, Y, and Z amount of money, that you're wasting energy from developing your skill. Focus all of your energy on developing the skill of trading. Become a good trader, because guess what? If you don't become a good trader, you'll never make that super return that you want to make in the first place, because you suck at trading. You'll just blow it all. And before you know it, you'll be 80 years old with nothing to show for it but wasted time. Focus on the right thing. Learn how to trade. Once you learn how to trade, the rest is easy. Once you have a skill, right? Once you have a skill, you can market that skill and use that skill for whatever you want. You can keep it to yourself. You can start a business. And this goes for any skill. Whatever you want, you can do something with it. But these, and I'm not talking about these people in particular, but following up on previous podcasts, these entrepreneurs who have this big dream of freedom of money, freedom of time, and they spend all their time writing down their goals in their dream journal, but never follow through in real life. What's the point? You're just another coulda, shoulda, woulda person. Worry about what's important first. Worry about what's in front of you. I understand wanting to have the money, have the riches, have the freedom. but understand what it takes to achieve that. Don't spend your paycheck before you get a job. Focus on what matters. And I promise you, if you focus on what matters, if you work that first part correctly, the rest will be easy.